Welcome to Trading Lounge and the commodities, and starting with Bitcoin here. I still don't need to go into much detail here. We'll be heading up to the 61.8% retracement level for Bitcoin. So from the top here to the low here, that comes in around the 50,000. So at the 50,000, we can expect some consolidation occurring at that point. So let me just have a look at this. So we'll expect a bit of a pattern like this. So once we get to the 50,000, we'll see some sort of correction at that point, and then the first high above the level, and the normal sort of pattern will either get this pattern, or we could possibly even just push past the 50 here and get this pattern. There's only really three patterns that occur at levels, so it will be one of those. So nothing to do at this point of the game. And when we look at Ethereum, just on the daily chart here, we've got wave 1 over here, wave 2 here. We've got wave 1 and 2 here, so we're pushing up quite nicely. As I mentioned yesterday, at this particular, in terms of the trading levels, at the 23 here, so 2000, 1, 2, and 3, we should see some little classic trading levels pattern here as well before pushing up higher to 2,500. So all of that is going reasonably well as well. And then we come over to the US dollar. There's two things that we can look at with the US dollar, is that this whole move down here as wave 1 or wave A, and wave 2 or B here. And then from that point, we'll come down for 5 waves here. We don't have 5 waves yet. We're waiting for that. Or wave, and then wave 2, and then down for wave 3. It's either that. We either get 5 waves down, and then wave 2, and then down again. Or this move here is all just the A wave, the B wave, and the C wave to the upside. And then we come down after that meeting up here at the 61.8%, then we come down at that point. So there's two ways to view this. It just depends on how you want to count this correction here, but I won't go into that. If we just go into here, and I'll just resolve the issue on this into on the intraday at 2,000 ticks here. So what we've been looking for here is, if we're going to get wave 1 down here, that means we'll need 5 waves down here, right? So in that case, we need this here to be a wave 4 here. And in that wave 4, we need wave 4 to pull back to the wave 4, 1 less degree, the 38.2%. We were looking for a bounce off the 102, as we've got an impulse wave here for wave A and B and C here. So this will be 1, 2, 3, 4, 5. So we're nearly there. We either get this here, and then we go down at that point as an ABC, right? And we come down. Then we know where we are at that point, because we'll have wave 1 here, and then wave 2 coming back here, and then down again at that point. Otherwise, if we get a classic trading level pattern on 104 here, and we can count 5 waves to the upside, then we know that wave B will be in place here, because the whole move down here will either be an A wave, a B wave, and a C wave to make this B wave here, and then we'll need to go up at that point. And in going up, we'll be looking at wave 1, wave 2, wave 3 here, coming up to here where this wave C finishes, then wave 4, and then wave 5 up here. And if we get 5 waves here, then we're going to get a correction, and then we're going to get another 5 up. So it's really all about this little top here, how it sort of plays out. Once we understand that, then we'll know where we are within the bigger picture. And of course, that's going to affect gold. But in the meantime, for gold, we are pushing to the upside. But just while we, before we go there on the gold, I just need to quickly just go over to the bonds. So this is the treasury bonds, the ETF here, the TLT. So on the daily chart, we've got 1, 2, 3, 4, 5 down here. We've seen the nice volume come into play here. And what we're looking for here is a nice ABC pattern up here for the B wave. And then we'll be down for the C wave here. So that's where the bonds will play out. Very clean, clear 1, 2, 3, 4, 5 here. I won't need to go into all the detail here. And if we've got this trading levels template here for TradingView, if you're a Trading Lounge member, you can email me at peter@tradinglounge.com, and then I'll grant you access to that. But you'll need to be a Trading Lounge member to get that. And we still need to do some more upgrades to it, but we'll put it out there and we'll continue to update it. So the reverse of this, of course, is the yields here. So with the yields here, we've got wave 3, 4, and 5 up here. And in that case, we're looking for wave 1, 2, 3, 4, 5 down for the A wave, the B wave, and the C wave. So we're still coming down in the first impulse wave as the bonds are going to the upside. The yields here will be coming to the downside, and we're thinking that yields down, dollar down, and gold to the upside. So with gold here, we've been looking at gold on a weekly chart here. We've got this top here, this top and this top. This top makes an A and a B and a C wave on the weekly chart with wave 1 and 2 here, and now we're building up here. Now we have made a new high here above these tops here. But as you know, with the trading levels at major trading level 2 here, once you push up there, it'll need to, the breakout's important, but the retest is part of that as well. As Gann would say, it would be the 4th time that a market would break through. So I think we're okay here. It's just how do we count this here? We've been looking at this as 1 and 2 and 1 and 2 to the upside. So let's go into the process and look at this in terms of smaller views here. So from wave 4 here, ABC for wave 4, then 1 and 2 here, and then we've got 1 and 2 here. So we're basically, the market has, pushed up quite quickly here and it's coming back and retest. So we're looking at this as 1 and 2 here and 1 and 2 here. So yesterday we were looking at this as the A wave to finish off down here. It's pretty much finished at the moment. So an A wave, a B wave, and a C wave coming into play there. So let's just go into the intraday on the 20 and just sort of check that out a little bit more here. So this is it in a bit of a nutshell here. So we're looking for wave 1 with 5 waves down as an impulse wave. So wave A and B and C here. And we can go into the intraday and start to further and just pull that apart here a bit further. So I'm not sure what that little dude there is, a lost little sheep. So you can go back to somewhere. So this will be it here. So yesterday we're counting down as 1, 2, 3, 4, 5 here. So we've got 1, 2, 3, 4, 5 here in the last little move here. So we should be getting some sort of A, B, and C here. I'm not going to focus on it too much. Our trade will be that we'll need to be over here at wave, 5 waves down here and the first impulse wave here, and we'll start to build back in long over here for this. So that's where that is. I don't think we need to go to, I don't even know if I've got it on 100 ticks. I'll just check. I didn't update it on the 100 ticks. It doesn't really matter. We'll just push up for that, and this is where the dollar will come in too. We'll need to check out where the dollar is. So silver's much the same as well. So we've got, well, silver's a little bit different actually, but I won't go into the bigger picture of that at the moment. But if we do line it up with gold for the sake of it, we've got 1 and 2 and 1 here, and then an ABC back for wave 2. So if we go into the 1000 tick area here, so in this section here, we're looking at, as we were yesterday here, in terms of 5 waves down for 1, 2, and 1, 2, 3, 4, 5 for third wave, fourth wave, and 1, 2, 3, 4, 5. So we're probably finished in here. We'll be looking at the ABC for the B wave and down for the C wave. So we'll tune into it over here much more, okay? So we'll just allow that to sort of do its thing at this point. But because we've got 5 waves here, we'll have a corrective wave, and then we'll move down. So it'll probably come back and test, well, we'll see. I mean, it can come back to the 61.8% exactly, or it could come 40, 50, 60% back here. It doesn't really matter. We'll just look for that 3-wave structure. We may get a short trade out of this before we turn long in that market. We come over to the base metals, and normally we check out the XME here first. So let's just do that. And I just need to clean this up a little bit in here. Just bear with me a second. So there's a couple of ways to view this situation here. We can look at this whole move here as an A wave, a B wave, and a C wave here. And then wave 1 and 2 and building up these all get squashed up on the close of the program. So yeah, 1 and 2 and 3 and 4 and 5 building up here. We can also view this here as 1, 2, 3, 4, 5 over here, or 1 and 2 and 3, 4, 5 here for wave 1 here, with an ABC back for wave 2 here. So it's possible. It doesn't really make much difference. Really. So let's take a look at some of the base metals that we've been looking at. So first of all is copper, and this is high-grade copper here. And what we've been looking at here is this particular rally here in terms of waiting to see if we get an impulse wave off this low here. So far we can look at this as 1 and 2, and we've got 1, 2, 3, 4, 5 in here for third wave, fourth wave here, and then a fifth wave. Will we get this fifth wave to make wave 1? If we get 5 waves here, then we'll have another 5 waves over here. At the moment, we've only got 3 waves here as an ABC pattern here. So let's just bring in the futures market here for this. So let's have a look at the futures market. Just go to commodities for a second here, and copper on the US futures. So we were looking at it in terms of, well, to see if this move up here would move past 5 waves as an ABC pattern here or further up. So we just need to wait and see at this particular point for this. We don't have a trade in copper at the moment, but if we do take out this top here, then we can add to positions on BHP and so on at that point. Okay, so while we're on the base metals, we can have a look at, well, I'll just go back here to see what we've got here. So, okay, so we've got uranium here. We know that uranium in the bigger picture here has got 1, 2, 3, 4, 5 over here, an impulse wave and a corrective move here. This is a corrective pattern here, this ABC pattern here, so we'll take out that at top eventually. It's just a matter of getting past the $30 mark on this ETF here. So it's a real it's just going to require patience, as I mentioned. We can have this top sitting in here as well, but I think probably fair to say we'd probably be able to lift this up here now as 1, 2, 3, 4, 5. But this can also just push straight up here. There's a variety of 3, 4, 5 here. So there's a variety of things that can happen here. It will just depend on what happens. Happens with the US dollar as well at this point, because that will apply pressure there. So I'll just leave these out the way here for a moment, because there's a couple of different ways to count this, but we're going to leave the stop out of the way, and we'll expect a classic trading levels pattern at that level, and we're just at the rival stages here at the moment. So we'll look at this as a wave 3, 4 and 5, and so there's a long way to go with all of this at the moment, so we don't need to do anything there. We just need to be patient with that. And I wanted to have a look at iron ore as well. So just this is Chinese iron ore here at the Dalian exchange, and we're looking here at 1 and 2 and going up for wave 3 here. So 1, 2, 3, 4, 5. So you can still hold Rio, FMG, Vale, any iron ore stock will be fine, but they're just going to be sitting here for a while in a wave 4. And we know wave 4s can be complicated as well, so we may end up with a more of a complicated correction in here. But as far as the crow flies, it does appear that we've got an ABC pattern here, so we should be we'll be corrective. It doesn't mean it just because that's in 3 waves here, it does give it the possibility of moving straight up from that point, but it's not, because there's 12 different types of patterns in wave 4. We could end up with an ABC here and then down and then up, so there's a bit of a variety of patterns to play out here. But anyway, the trend is still intact, and nothing to do at this point here. So this is the energy sector. And with the energy sector here, there's probably a couple of ways to look at this. So, this week I started to look at it as a triangle pattern, because it's not, we could look at this as 1 and 2 and 1 and 2 and all sorts of things here, or 1, 2, 3, 4 here and 5 down here and those sort of things. But as I mentioned before, even if this was a larger A wave here and B wave here and the C wave here, then this would still be wave 1 here and wave 2 here. But I've just got it as a triangle pattern because it's not running really smooth at the moment. But as I mentioned, we will be, this is all corrective pattern here. So we will be coming down. It's a continuation pattern of the trend. So we will be coming, and it's, it's making its move now. It's being, the 85 here is being rejected. So, it will drop down. Now it's going to be a bumpy ride once it gets into group 1 of 80. So 1, 2, and 3. It's going to get quite bumpy in here. So just be mindful of that. But definitely the energy sector is under pressure, and we know that. This is crude oil here. We've had this as wave 3 here with an A and a B and a C for wave 4. And I could look at this in different ways. So I'm going to look at it in a very conservative way first of wave 1 and 2 here, and then 3 and 4 here, and then 1 and 2, and then all the way down for 3, an A and a B and a C for 4, and we still need to come down. We're starting to take this low out down here, which is the main thing. Now, there's a lot of things that could occur from this point. We possibly come down here, which about this point would be about right. But it could certainly extend down here further down into the $70 mark here as well. So, over the next few days, we'll look at the bigger picture and the variety of patterns that can occur at this point. But as far as the crow flies, we've done all the right things at the right time. We've covered that short trade in here as well. So, yeah, all looking pretty good at this stage. There is a bigger picture to the downside on this as well. But we'll check out that soon. And over to natural gas. So, with natural gas here, we've been viewing this as wave 3 up here with wave 4, and looking at this, coming down, taking this low out here. So we should see natural gas at some point in the future under $2 here. I'll just want to check on the some of the other gas markets here for a moment. So this is so this is the gas futures here at NYMEX, not the E-minis though, not the mini contracts. So yeah, as I've always said, the tops here are a little bit different on each of them. They all play out a little bit differently. I mean, we could view this as 1, 2, 3, 4, and coming down for 5 here, and some sort of 1, 2, 3, 4, 5 into this space. I'll just have a look at natural gas here. This is Pepperstone's spot, but they do a lot of CFD, so it's probably CFD on spot. And I don't know if they're are they market making, or are they getting liquidity through somebody else? I'm not quite sure about those guys. I mean, a reasonable firm. I haven't heard any complaints, so I don't mean it in a bad way. But yeah, there's lots of, in this case here, basically for all of them really, from this low to this high up here, this here at the 250 in this case would be the 50-60% retracement level. As I mentioned yesterday, there's a lot of support sitting in here as well. So it's going to be a slow grind here, which was going to show up in all the other markets as well. This is the natural gas fund here, the US one, and in this case here it's pretty straightforward sort of count that we've got 1 and 2 here. Don't need that sitting there. So 1 and 2 and 1 and 2, and coming down for the third wave and the fourth wave. So in this case, at the $5 mark here, it's going as the ETF here. It's going to be sitting here bouncing for a while. So you can still stay on the short side, and these will be the E-mini futures contracts here. And because that support's going to show up everywhere else, it's going to show up here as well at the 250. So we could put this 250 area here is going to play out as the support area here for this. And it's sitting in group 2 here at the moment, but anywhere depth in all of this here is just going to be, it's just support, so any short trading, from all of this here through here is just showing up here. That's all. So it's going to be a real slow sort of grind through all of that. So I'll just leave that as is. Coffee's cruising along okay at this point. So Obviously, when it comes up to the 200 here, it's going to play out, but we could probably look at this as 1 and 2 and 1 and 2 and the third wave building up here, but still play out here. If you want to get above this 2 here, I mean, it's just going to play out with this pattern here. That's what's going to happen. It's going to hit 2, bounce back, go up, come back, all of that. So I don't know if you want to hold through all of that. If you've got futures contract, there's no overnight financing. If you've got CFDs, well, then you don't want to be involved in all of that timing at that point. It'll be this, you know. So that's a lot of time across, you know, here for all of this from here to here. Time is money. So I should be able to get you in and out at that point if you've got CFDs. But if I'll leave this open for futures, and we'll just play out, play across on this here. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.